If you love a good David versus Goliath story, and you love rooting for the underdog, and you also love earning a crazy amount of staking APY, then you're gonna love this video, trust me. Today, I'm gonna tell the story of how this new NFT marketplace used something called a vampire attack on its competitor, not only to steal market share, but an entire community. A vampire attack so successful that LooksRare has already passed Goliath in revenue, not to mention that Looks stakers are earning 500 to 600% annual returns. How? Because LooksRare pledged to give 100% of all revenue back to the users and stakers. Okay, so is this new NFT marketplace the OpenSea killer and the next big thing in the NFT space, or are there some shady tokenomics here that are not telling the entire picture? I dove right into the blockchain, and what I found is pretty interesting. Let's get into it. For those that don't know, OpenSea has been the biggest and most popular NFT marketplace, and it's not even close. From February 2021 to February 2022, OpenSea experienced unbelievable growth, right? They hit a 300x increase in revenue in this 1-year time frame alone. Today, OpenSea generates about $20 million in revenue per day, which if we annualize, assuming zero growth rate, right, which is super conservative, that's an easy $8 to $20 billion per year company. But here's where the tide started to turn. In crypto and Web3, we like protocols and apps that share the wealth. Uniswap set the example for this in September 2021 when they airdropped the Unicoin to everyone who had ever made at least one transaction on the exchange. This was unexpected, unknown, and it immediately aligned thousands of people to root for Uniswap's success. So as OpenSea started becoming this giant revenue generating machine by making a fortune from charging that 2.5% fee on every sale, its users started anticipating an airdrop of the official OpenSea coin. Buzz started building on Twitter, Reddit, and other forums. Months went by and no news or updates were made on this. And then OpenSea finally broke silence. The CFO stated, "It would be foolish not to think about going public." And this was not what the community was expecting at all. It meant that OpenSea had its eyes set on going live on Wall Street, and a very small group of people would make a ton of money from this maneuver. But the NFT community started bashing the statement all over Twitter, arguing that OpenSea going public is the same as them selling out, and forgetting about the users that made it all possible. Crazy enough, this made OpenSea backpedal and scrap that IPO idea, at least for the time being. With all this mayhem going on, there was a competitor lurking and building in the shadows. Then on January 10th, 2022, over 100,000 NFT traders woke up to an announcement that they were eligible to claim an airdrop. The coin was called Looks, and anyone who had traded 3 or more Ethereum on OpenSea in the second half of 2021 could go and pick up their free coins. That day, the LooksRare Marketplace was live. Twitter started buzzing with excitement from the NFT community as people started claiming their free coins, and the buzz would only get louder. And then as people started reading the docs and understanding how LooksRare worked, it was made apparent that LooksRare had pledged to give 100% of all its revenue to its stakers. That's right, every NFT sale on the platform charged a 2% fee, and that fee would go directly to the community of Looks stakers forever. In the first week, LooksRare saw over $3.5 billion of transaction volume and $70 million of revenue from that 2% fee that they charge. That's $70 million all going back to Looks stakers in the first week. LooksRare gave the NFT community what OpenSea didn't, right? And that's skin in the game and wealth distribution. This aggressive method of siphoning users from another community is called a vampire attack. And it basically just works by offering better rates to investors of another platform to kind of bring people over, right? And it kind of worked. But here's where we get into muddy waters. So I've been watching LooksRare from a distance for about a month now, and I was convinced at first that this might be the next big thing. Simply because it looks like the vampire attack worked, they won over a loyal community, and the revenue share going to stakers has remained stable and super impressive at like 500% APY since launch. On paper, LooksRare seems like a wild success, right? Generating 2 times the monthly revenue of OpenSea and generating 5 times the daily sales volume of OpenSea, which is insane numbers, by the way. And all of this after just 3 short weeks of being in existence. So I dug even deeper and realized that yes, numbers don't lie, but they can be very misleading. I then found an interesting dashboard on the Dune Analytics website, which definitely raises some eyebrows. Before we get into some awesome content, let's talk about the official sponsor of DeFi Donut, PoolTogether, which allows me to give you guys free and frequent videos. Imagine having $73 in your bank account just to wake up one day to a balance of $43,760 because that actually happened to a PoolTogether user just a few months ago. See, PoolTogether is one of those DeFi apps that seems too good to be true. It is a no-loss crypto lottery, which just means instead of your money buying tickets, it is pooled together with other people's funds to earn interest in the DeFi world. That interest earned every week is combined and distributed to a few lucky winners. You can withdraw your funds at any time, so you have absolutely nothing to lose. So head over to PoolTogether.com and get paid to literally save money. Good luck, guys. This dashboard compares the users, revenue, and volume of both OpenSea and LooksRare side by side. And it shows us that, on average, LooksRare pulls 300% more daily volume than OpenSea, right? Which is a stupid high amount. But LooksRare only has 3% of the active users that OpenSea does. Something definitely didn't add up. But then it made sense, because LooksRare actually gives Looks rewards on every single trade made on the platform. And right now, these rewards outweigh the 2% fee that the platform charges. So if Bob is a whale, he would list his Meebit NFT, for example, for $50 million. Being way above market price, nobody will buy this. But Bob's second wallet buys it for $50 million. In this transaction, 2% equals $1 million, which is the platform fee, which goes to the Looks stakers. So Bob actually loses $1 million upfront. However, Bob gets rewarded, let's say, 4% in rewards for this trade, which is $2 million. After the trade, Bob is now in profit of $1 million. This is called wash trading. And to be honest, the whales like Bob aren't in the wrong. I mean, they're kind of incentivized to do this. They're making money and the platform is making a lot of money, aka the stakers. So this kind of explains why there's barely any users compared to OpenSea. But the volumes and revenue is super, super high. All the volume is coming from a concentrated, small bucket of whale users. So now you're probably wondering, is this sustainable? I'm not really sure. However, when the trading rewards kind of subside and dwindle down, I believe that some more realistic numbers will start to surface. Honestly, I still love the idea of a platform giving 100% of its revenue to its community, so I'm kind of rooting for LooksRare to give OpenSea some solid competition. I think everybody benefits from that. I mean, LooksRare has a nice website, they listen to the community, and they've won over a lot of believers, so hopefully they'll continue to see some success. For those that will ask, you can purchase a Looks coin on an exchange like Uniswap. Just go to CoinGecko, search for LooksRare, and scroll down to find which exchanges have it available for trading. And staking it is super simple as well. However, it is on the Ethereum mainnet, so be prepared to pay a bit in transaction fees. You can stake on the LooksRare website, but since you've made it to the end of the video, I'm going to reward you with some free alpha. After buying your Looks coins, head over to Harvest Finance and stake them in their Looks Vault instead. Harvest auto compounds your Looks and ETH rewards, resulting in a much higher APY. Right now, it's about 2,000% at the time of this video compared to like 400% on the Looks website. All right, guys, so if you enjoyed the video, consider subscribing and give me a follow on Twitter, and I'll see you guys in the next one.